The survey is for 200,000, but the whisper number is substantially higher.
Well, we got some good news this week, or at least some news that pushes people in that direction, with the ADP numbers coming in at 235, jobless claims low, and a rise in the manufacturing payroll survey from the ISM. So at this point, people are looking for continued strength, at least in the establishment survey. 200,000 jobs, as Matt says, is the basic estimate. That probably doesn't include the 434 people in the House of Representatives who haven't been sworn in yet, so aren't getting paid. The unemployment rate not expected to change, and that's a problem for the Fed, which has predicted it will, which means what's the question about earnings? Do we see earnings drop? The forecast is yes, and we're still going to be running at a 5% annual rate, which is too high, according to the Fed. When they look at the numbers, they think it should be in a range of about 3 to 3.5%. Nothing wrong with getting more money, but you shouldn't get so much money that it starts to push inflation higher, and that's what they're worried about. So that's what Wall Street's going to be looking at today.
Okay, so all of those are headline figures. Beneath the surface of the data, are there any interesting nuances you're going to be looking for in particular?
A couple of things. One is the prevalence of service industry jobs versus goods industry jobs. Goods industry jobs have been falling off, where service industries have been pushing up, and that's where the wage pressure's been in service industries, because there's a shortage of labor, and so they're being forced to pay more to get people to come back to work. The other issue is this household establishment survey dispute. The Philadelphia Fed added up all the household survey jobs and says over the last year we've gained 12,000 jobs, whereas the establishment survey has shown us more than 1 million jobs. And so therefore, which one is right? We don't really know at this point. It's going to be interesting to see how much they diverge this month.
Mike, just briefly, I mean, jobs often seen as a lagging indicator by some. How much emphasis is the Fed really putting on this versus inflation?
It's the average hourly earnings, Anna, that people are going to be at the Fed watching rather than necessarily the rate of job creation. They are lagging indicators. The unemployment rate usually doesn't start to really rise until a recession has already started.